There's only one word for this Santa Claus rally, and that word is parabolic. This is a parabolic Santa Claus rally. Hi, everyone. I'm Lynn Kitchen, and this is Market Sense. Welcome to Market Sense. Well, parabolic is a word for this market because it is going straight up. Parabolic. This is what it looks like to mathematicians when trends and prices go straight up, sky high. This is our Santa Claus rally. Wow. This is a rally to be remembered. We've never seen a rally like this before. Look, on the Dow Jones Industrial Average, we have just hit a record, all-time record of over 44,000. On the S&P 500, over 6,000. On the NASDAQ, over 20,000, a major milestone. And Bitcoin, over 100,000. And guess what? As of this week, Tesla went up so high to $400 a share that Elon Musk's net worth is also parabolic. His net worth is now over $400 million. One man, $400 million. This is a parabolic Santa Claus rally. Now, Tesla, this is a chart of Tesla, a price chart of only the last 7 months, when the price has gone from 150 7 months ago to over 400 today. Look at that movement. That is a price movement that we call parabolic in nature. It's going straight up. Well, take a look. When you press out the time, this is what a specialized chart looks like that's called a point and figure chart. I love point and figure charts. It presses out the time and it just shows you the price action. This is the same 7 months. Actually, it's 1 year on Tesla. Look at that price movement. That is truly a parabolic price movement. And so what does that mean to all of us? Not just in one single stock, but in the entire markets? That means those price actions that go up so fast can also come down pretty darn fast. Well, we've experienced that, or at least I have in my nearly 40 years of experience. But look, this is what the actual overall market looks. This is the NASDAQ 100. And this, again, is a point and figure chart squeezing out the time frame so that you could just see the price movement. That is also a parabolic chart in nature, only a 1 year chart. Look how fast that is moving up. And over here, it's not just the technology. It's not just the NASDAQ companies. Here's a retail company, Tractor Supply. You would think a little bit more calm in nature. No, this is only a 1 year chart for Tractor Supply. Again, parabolic in nature. What's going on? Well, once again, it's a parabolic Santa Claus rally. Look at this chart from 1996 all the way to 2024. The last parts of this chart is showing, this is the Standard & Poor's 500 equities. You can see a parabolic move from when we had the pandemic here in 1920 all the way up to 2022. Of course, we had a bit of a pullback here, but then since that pullback from 2022 to 2024, here we are at the top. That is parabolic in nature. Very, very fast on the upside. So what is that telling us? That is telling us that we've had a tremendous amount of upsurge of what it is that makes prices move. Do you know what that is? What it is that makes prices move in a parabolic fashion is usually two things. One, interest rates, and two, earnings. So we've had interest rates coming down and earnings going up. And that is a very, very good formula for a parabolic Santa Claus rally. And that's exactly what we are getting. And it continues. So what we want to do is make sure that we understand what's going to go forward into 2025. And believe me, this has been fueled by a third idea, and that is not just interest rates, not just earnings, but fueled by AI. And that is not going to stop, my friends. Going forward to 2025, we believe that these markets are continuing to be fueled going forward. But this is the key. We're going to move continually into a growth period, yes, but a big but here. But with volatility is coming. Volatility ahead. Anytime you have a parabolic move up as fast and as furious as we have experienced, you are going to have a commensurate fast and furious volatility ahead. Those potential downdrafts or pullbacks in the market that I have experienced in my career over 35 years as an investment advisor, when we do see these parabolic moves, we always have a move back to what we call the reversion to the mean, so that as you stretch a rubber band, for example, it's not going to stretch forever. There's going to be a time in which that pulls back, and it can pull back very, very quickly by means of the tension that a rubber band is pulled out with. And I believe we are at a very, very high peak in that tension right now. It doesn't mean that we're at the end of this bull market rally, but it does mean that we're going to have some volatility ahead. So we want to make sure that we stay in high quality investments and make sure that we are buying right, that we're not chasing these prices on the upside, but that we are doing our research and finding value, finding companies, whether it is the stocks, the equity, or the bonds, the debt of quality companies, and making sure that we buy correctly at the right price, that we're not chasing and paying too high a price. Very, very important going forward in 2025. Why? Because we've had an amazing uptrend in the last year alone. Here's a chart of each industry group and just how fast we have grown in 1 year, 2024. Who would have thought that this would have been a record-breaking year? Here is one group of the communication services up over 40% in 1 year alone. Of course, we knew that technology was very, very strong. Technology also at 40%. But who would have known that the consumer discretionary and financials would also be over 35% on the upside in 1 year? That's almost unheard of. Not just that, but take a look at the slower growth parts of the economy. The industry group of utilities up over 30%, nearly 30%, and even industrials and consumer staples above 20%. So we've had an amazing record market all year long, actually 2 years in a row. So what do we need to expect in 2025? We need to expect a little bit of a potential calming of this kind of ebulliency. However, with the future progress of continued growth of AI and earnings going up, along with interest rates coming down, it's still a very powerful formula for growth ahead, but with volatility. We must understand that. Just look at these. Once again, this is another way of looking at what we have experienced in the market, whether you have been invested in funds that are in large capitalized companies, medium-sized capitalized companies, mid-cap, or small capitalized companies, small caps, or whether you have been in the growth category or what we call value category, those companies that are of value that haven't actually priced in their growth movement yet, or a combination of both called the blend. Just look at the numbers that we have experienced, up to 37%. This is the most amazing year that we've had probably on record. So we must expect going forward a little calming of this. So we must expect that possibility going forward. But certainly, let's not use the word calm when it comes to volatility, because those price actions, as I mentioned before, with the parabolic move of the price action, we're going to have some pretty good movements of corrections ahead in 2025. Now, that's good news in one way. When the prices come back down, we can have cash on the sideline ready to purchase the highest quality companies that money can buy. And those are the times that we want to buy. We don't want to continue to chase these companies that are actually potentially too high a price right now. So the major theme for 2025 is volatility. And that means you're going to have opportunity. Opportunity comes with prices that move up and down. So yes, right now they were moving up in an amazing bull market, and get ready for the possibility that that's not going to go on forever. We'll have a movement back so that you'll have an opportunity to get ready to purchase the kinds of companies that you've been wanting to buy. But do your research to make sure that you're moving into quality, quality, quality. Well, this is a chart that I found published by BlackRock that says that we think that the United States stocks can keep outperforming the world. So the United States stocks, equities should lead on the upside, not just this year, but continuing into next year. So this is a potential return for the stock market. Look at the earnings. The earnings continuing to move upward over time through 2024, 2025 is the magic sauce that moves prices upward. So their projections are that we're going to have continued strong upward movement in corporate earnings, and therefore that will undergird the price movement that we have seen already and potentially continue. And what is behind that is this AI race. So they're saying also, which I absolutely agree with, and I've been saying this all year, AI has sparked an amazing investment tsunami. We'll call it a tsunami. It's not just a surge, it's actually a tsunami. And as that investment trend moves not just with a few of the leaders, but also begins to trickle down to all of the industry groups throughout our economy, we're going to be starting to see a great deal of change as it relates to productivity among companies as a result of their use of AI. And when productivity moves up, guess what? Then profit margins move up also, because expenses move down. So profit margins move up and earnings begin to move up as well. So AI is going to be an amazing productivity tool over time, and that is very, very encouraging for the market. But buyer beware. We have to make sure that we're not overpaying for any new purchases. Well, this is a quick chart that shows the price earning ratios, which is the pricing mechanism. And this is the Standard & Poor's 500 broken out between the top 10 companies in the Standard & Poor's 500 and then everyone else. So the top 10 is the green line that you can see. This goes back to 1996. The top 10 in the green line companies back in 2000, when we had the dot-com boom. It was the same phenomenon. Back then, we had a group of technology companies that excelled, and they became very, very expensive very quickly, almost in, as I mentioned before, a parabolic curve. Well, we've had that again here. in the last few years, and right here in 2024, these actually 10 companies in the Standard and Poor's 500 are at very, very high expense ratios, PE ratios, very high. And yet the remaining 490 companies in the Standard and Poor's 500 are represented by the darker line, and you can see that they actually are at a very low price performance here. The PE ratio is much, much lower, more at a value, what we call a value. So there are still parts of the economy that represent good value to purchase. Lesson being is that we don't want to chase those companies that are high priced in right now. However, with AI, everything can continue to move up, and I do believe we are in for a very, very good, solid year next year. It probably just won't be as ebullient as this last year. I mean, 34%, 30 to 40%, 20, 30, 40% in one year. Extraordinary, just absolutely amazing. So going forward, what do we need to take a look at? Well, we do have things in our favor. The CPI, the Consumer Price Index, just came out this week and showed that we are on track. We are on track right here to maintain the projected price here of a normal above 3%. Of course, we haven't gotten down to the 2% that the Federal Reserve would like. However, it is indicating that inflation continues to move down. That is the good news. As that continues to happen, then we're going to continue to have a good market. Now, we all have heard that the potential of future tariffs for the next administration may, and other things, might make inflation come back again. And if that's true, then we will make sure that we have an opportunity to protect the gains that we have made so far, because that is going to add to volatility. Once again, it's going to be a volatile year next year. But I think the good news also is the future price direction of the interest rates. So we are expecting the Federal Reserve, because of the nice docile inflation rate that we just spoke of, we are expecting the Federal Reserve next week to lower those interest rates one more time before the end of this year. They're saying 25 basis points. And if that happens, and I do believe it will, we're going to have a continuation of this Santa Claus rally. And this is a chart that shows the fast rise that we had from very, very low interest rates level. They went fast up since 2022 and have leveled off from 5%, now around 4.47% right here. And the projections are that they could continue to move down somewhere in this vicinity, potentially either 3.5% or maybe even down as low as 2.9%. That will most likely, that is the tremendous trend that we are experiencing now. Again, this is what is making the markets so happy that we're having this parabolic Santa Claus rally. So interest rates, earnings, that's the magic sauce. What are we going to be looking for, everybody? We're going to be looking ahead for volatility. So we must be ready as investors for making sure that if we need to take some profits, we take those profits while the markets are strong. But we also want to make sure that we have a long-term view, because it can get a lot better with the advent of the conjunction of new technologies converging ahead. our lives will be unrecognizable by the year 2030. And here it is, we're moving into a quarter century, a new quarter century, 2025. Let's get ready, let's get positive, but let's get prepared for volatility ahead. Let's make sure that we have a long-term view of what we do own, but then also as the markets give us a chance for during a pullback, it will give us a chance to buy high quality companies at a lower price. And that's how you build wealth over time, by buying the highest quality companies at a reasonable price and then holding them as they grow over time. So here's my investment strategies for 2025 as we can put a bow on 2024 on this Santa Claus rally. We want to stay invested. Right now, it's an indication that we're still risk on. Stay invested in high quality equities and bonds. But buyer beware, there's going to be volatility. So that means that only purchase those companies that have the highest quality earnings and growth of earnings, sustainable growth of earnings over time. That is a main major point, whether you are looking in growth companies or value companies. They must be the highest quality earnings, and there are ways to learn how do we measure quality earnings, and I can teach you that. But we're going forward in 2025. We want to be putting our monies more, allocating more into the value stocks, as I mentioned before, the part of the markets that still have a great deal of value. We want to concentrate on adding an asset allocation towards small cap and mid cap companies. Those will be the ones that are still likely to continue to grow, as well as international. And that includes both equities and bonds. And we want to look at Europe and Japan as the growth areas for the international markets. Certainly, the emerging parts of the international markets also have potential, but we need to make sure that this tariff part is a little bit tricky. So we'll need to be very, very careful. Right now, I'm looking toward Europe as a buying area and Japan. We want to make sure, if we're in the bond area for that fixed income part of our portfolios, to stay with the highest quality, but keep short to medium term of the fixed income part of our portfolio. We want to hedge. We want to make sure that our portfolios are well hedged with traditional hedging asset classes. That would include gold, oil, and industrial metals, precious metals. So also a theme for us to pay attention to in 2025, which I believe will be very strong, is the industry group of infrastructure, those companies that are involved in building roads and bridges and the electric part of our infrastructure of the United States. I think that's going to be a major theme going forward. So there's what I believe that we can look forward to in 2025. And I would like to just invite you to like this, and please put your comments below. Let me know how you're liking the Market Sense report, and let me know what other topics you would like me to cover. I'll be happy to do so. So with that, I am so delighted that you have joined me here today, and I want to wish you a very, very happy holiday, a beautiful Santa Claus rally, and celebrating your life during a happy new year. Thanks, everybody. Bye for now.